After a strong 2025, investors are entering 2026 facing stretched valuations, ongoing global uncertainty and shifting interest rate dynamics. Following the Nedgroup Investments Investment Perspectives 2026 series, where portfolio managers shared how they're positioning portfolios for the year ahead, Rob Johnson, Head of Investments at Nedgroup Investments, joins us to unpack the key themes emerging from those discussions. Rob, thanks so much for your time today. Now, one thing is certain, right? Uncertainty. And just looking at the first month of 2026, things that have happened are things we could have never imagined from a geopolitical standpoint. Maybe let's start there. How are you positioning yourself in markets with all this uncertainty?
Wow, that's well, thank you very much for having me. That's a very broad question and a very interesting time to be answering that. You're right, geopolitical events continue around the world, and a certain member of the political elite keeps making statements that change everybody's views on what's going to happen. So it is a time of flux, and as you mentioned, the only constant is change. I think one of the themes that came out of our roadshow was that our managers are defensive, wary of US equity valuations, and they're looking for asset classes that provide a real return, excess returns over inflation. So they're looking at things like inflation-linked bonds here in South Africa, but more broadly, they're thinking about, from a longer-term perspective, they're maintaining a focus on equity, because there is some decent pockets of valuation all around the world if you just look away from the top mega cap names in the US that have been driving markets for the last 12, 18, 24 months.
Let's look at the U.S. markets in greater detail. You mentioned there, there are more pockets of value when you look elsewhere and not necessarily the tech sector. But I want to hone in on the tech sector, right? We've been dealing with overstretched valuations, concerns around an AI bubble. Just your thoughts around that sector and whether there's appetite to get into that sector, or are you looking at perhaps some of the secondary markets? We've seen the memory chip makers really doing some good numbers on the back of the AI demand story.
Yes, I really think it's been a market of the haves and have-nots, those that are AI beneficiaries and those that are perceived to be disruptable from AI trends. So you've seen the likes of legacy software providers such as Microsoft, SAP, Salesforce. They've been hurt by recent developments or media around AI that perceives that they will be disrupted by the ability of people to use AI to program and usurp the incumbents. However, we think that's a bit premature. We think that a lot of these businesses are embedded in the companies that they partner with, and it's very difficult for large firms that use this software to change, especially in the very short term, 5, 10, 20 years. I think it's going to be before businesses such as that I've just mentioned will be disrupted by AI. I think they'll become beneficiaries. I think they'll be able to manage their margins better using AI and improving efficiency and productivity within their businesses.
And just going through some of your notes here, I see that diversification remains the name of the game. Let's talk about diversification across asset classes, particularly commodities. We can look at what we've been seeing in precious metals as well as the industrial metals as well. Copper really doing good numbers.
Yes, absolutely. And I do think if you look back at 2025, it was seriously exceptional returns. And that's something that I don't think we will experience again in the near future. That in South Africa has been driven by platinum group metals, or PGMs as everybody refers to it, and gold. And I think it's really important for investors not to drive whilst looking in the rearview mirror. So we need to sit and assess where we are now and what are the prospects for specific companies looking into the future. So I will urge investors all around the world to be looking at fundamentals. Where's the free cash flow generation? Where do valuations look really attractive? And to your point, it's bifurcated the market. There's some real pockets of valuation, whether you look at a regional perspective or sector perspective, or even individual companies within a sector. So within the semiconductor, you have Broadcom and NVIDIA producing exceptional returns last year. But you've got other chip makers such as ASML that haven't kept pace with the broader market. So it's again areas of pockets of valuation that will help investors outperform in the future.
All right, let's leave it there, Rob. Thank you so much for your time and taking us through your analysis of markets for 2026. Now, that was Nedgroup Investments Head of Investments, Rob Johnson.